All right, let's dive right into a real head-scratcher. The Chinese media giant Bilibili just dropped an earnings report that, on the surface, looked absolutely flawless. We're talking record profits, soaring revenue, basically everything an investor dreams of. And yet, the market's reaction was to sell. Hard. So the big question is, what on earth did Wall Street see that the glowing headlines completely missed?
And this slide just lays out the paradox perfectly. I mean, look at the left side, the results. Total revenue is up a super solid 20%. Adjusted net profit hit a record high, a massive turnaround from years of losses. And their gross margin, it's gone up for 12 straight quarters. It's textbook perfection. But then you look to the right, at the reaction, and you see this brutal drop in the stock price. The two sides of this story just don't add up at all.
So what gives? What was hiding inside this seemingly perfect report that sent investors running for the exits? That is the billion-dollar question we are going to unpack right now.
Okay, so first, let's just establish how good this report card actually was. Because I'm not kidding, the numbers Bilibili put up were nothing short of spectacular. They really earned that top student nickname.
Let's just run through the highlights real quick. For starters, total revenue leaped up 20% to 73.4 billion RMB, which, by the way, smashed expectations.
But this was the real showstopper, a record-high adjusted net profit of 561 million. This is a huge deal, marking their big, historic pivot into profitability.
And you know, this wasn't just some lucky break, because their gross margin has been climbing for 12 consecutive quarters. That shows real, sustainable efficiency.
And on top of all that financial wizardry, their community is stickier than ever. The average user is now spending a record 105 minutes a day on the platform. That is a powerful, powerful defense against any competitor.
Now this chart is where it gets really fascinating. This visualizes their incredible efficiency, something analysts call the scissor effect. See how revenue grew by that strong 20%? Well, look at the gross profit. It exploded by 46%, more than double the rate of revenue growth. So you have to ask yourself, how in the world did they pull that off?
Well, here's the secret. It's just unbelievable discipline. While all that cash was pouring in the front door, Bilibili kept its operating costs almost perfectly flat. This is a complete reversal from the old tech mantra of growth at any cost. This is a company that's learned how to be lean.
So, with a flawless report card like that, we're right back to our mystery. And it turns out, the answer was hiding inside the very numbers that made the quarter look so fantastic. It's a classic double-edged sword scenario.
The problem was lurking right here, in their revenue breakdown. As you can see, their business is nicely diversified. But what I want you to do is focus your attention on that blue slice, mobile games. It makes up about 22% of their total revenue.
Because that 22% slice didn't just grow, it went supernova. Mobile game revenue was up a jaw-dropping 60% compared to last year. It was almost single-handedly responsible for the company's amazing quarter, all thanks to one monster hit game. And this is where the trouble starts.
And here's the bombshell. This quote from a JP Morgan report lays out the entire case against Bilibili. They warned that because that one game was so successful, it created what's called a high base effect, making it nearly impossible to show strong growth next year. Their prediction was scary. They said company growth could crash from over 20% all the way down to just 5%. You see, the market isn't reacting to the great quarter that just happened. It's panicking about a potential growth cliff that's coming up fast.
So this is the crucial point. Right now, investors are looking at Bilibili and seeing two completely different potential futures. And it's created this massive tug of war between the optimists, the bulls, and the pessimists, the bears.
It really boils down to this. On one side, you have the bulls. They're looking at the hard facts right now. Bilibili is a lean, profitable machine. It has a loyal community that's not going anywhere, and its ad business is taking off thanks to AI. But on the other side, the bears are looking ahead, and they see that huge gaming growth cliff. No obvious next blockbuster game to pick up the slack, and they're worried Bilibili will have to spend a ton of money just to keep from shrinking.
So the bull argument is pretty straightforward. They believe this new, efficient Bilibili is here to stay. That 105 minutes of daily user time is like a fortress. And most importantly, they see the advertising business as the new hero, the next reliable growth engine. With AI helping them charge over 10% more for ads, they think it can more than make up for any slowdown in gaming.
But the bears are just fixated on one simple idea. Stocks are priced on the future, not the past. They argue that the success of that one-hit game set an impossibly high bar for the next year. They're looking at the pipeline of new games, and they just don't see another world beater in there. They're worried that Bilibili's whole identity as a high-growth company is about to fall apart.
So, who's right? Is it the bulls with their faith in proven performance, or the bears with their fear of the future? Well, this whole debate is going to get settled over the next few months, and there are some very specific clues that we can all watch for to see which way this story is going to break.
Here's your checklist. First, keep your eyes glued to the gaming revenue numbers for the rest of the year. Can they actually do better than that scary 5% growth prediction? Second, watch the ad business, specifically a metric called eCPM. If that number keeps growing by double digits, that's a huge win for the bulls. And finally, just listen for any news on new game approvals. An announcement of a potential new hit could change this whole narrative overnight.
And really, that's what it all comes down to. Bilibili has proven it can be a profitable, efficient company. But now it faces a brand new test. Can it build its next big growth engine, whether that's AI-powered advertising or a new hit game, before the momentum from its last one completely fades away? The answer to that question is going to determine whether this perfect quarter was the company's peak or just the beginning of a whole new chapter.